Yo, what's up guys? I'm jumping in on here just so everybody can actually get a little bit of an understanding on how I actually like to trade. The most important thing I want you guys to take from here is you just need to have a good routine. So what you can do is get yourself a little whiteboard that basically shows what you're gonna do, okay? So mornings, I do some yoga, which is an Asana Rebel app. Then I go for a walk at 8 o'clock. Then there's some cold showers to wake me up, get myself going. Then I'll read, do my website or videos, and then I plan for 3 p.m. trade, which is basically the New York Stock Exchange opening, okay? And then I send it to my trading group so everybody can check out what I'm doing. Then I go back to reading, learning, and videos, okay, until 3 p.m. So as you can see here, the trading all starts. There's no phone trading, guys. I don't believe you should trade on your phone. You can manage it from there, but that's something up to you. I believe that it doesn't really work that well. And then guys, I have a specific amount of money that I'm only allowed to lose, okay, in a day. And that's always here. So just before I leave my door, I've got everything ready to go. Now we're gonna run into my office and we're gonna see how I like to plot the charts. I'm gonna show you what my office looks like, just so you guys can get an understanding of what you should have when you are trading. You want to be as precise with your environment as you are with your trading. A good environment holds for good work ethic. So let's go check it out. Okay guys, so this is the office, as you can see. Just very nice and neat. So I've got the TV to make sure when I watch the news and stuff, I can check what's happening and then apply myself. And then over here, I have all the books I'm reading, but by far the most important ones I think anyone should read is Think and Grow Rich and The Power of Now. These two will set you up for success. Okay, now this is how I look at everything, guys. So I have my trading view and then I have the actual trades I'm going to take. Okay, so those are the two things you have to incorporate with your trading plan. Okay, gotta do that stuff. But so guys, a little bit dark in the room at the moment. I know it's load shedding here in South Africa. What that actually means is that the power has literally been shut off for like 2 hours. Crazy. But it is what it is. I've got a little UPS that helps with all electricity supply, and you know what? Gotta just make things work, guys. It's not about having problems, it's about solving them. Let's get into this and see how I do what I do. Let's go. Boom. What's up, guys? Welcome to my computer. Okay, so let's get right into it, guys. The most important thing I want you to always do and never forget about is let's go and look at news first before doing anything. We need to know whether or not news is in the right place. Okay, if the news is in the right place, we've got confidence in the market, and we understand what's happening in the actual economic side of the world, then you're gonna win most of the time, okay? Because the trend is what we are trying to follow. And if you can get into the right position, you can actually hold trades for a lot longer than you think. I'm not really a swing trader, I'm more of a day trader, guys. That just technically means I normally like to get out of the market in 24 hours. But it doesn't mean I don't try and hold. And there's different brokers you can use for this. Some of them have different swap fees, commissions, XYZ. It doesn't really matter to me, obviously, because I'm more of a day trader. But if you do and would rather like having a swing trading account, I definitely do think you should do some research on that and check out what the best way is. For me, I am going to show you guys now what I do when I set up my trading. So we'll do number one. Let's go look at news. Now we are on Forex Factory. This is going to give you guys good information about what's actually happening in the world. It's a good economic factor that we need to take into consideration before anything else. This is number one, okay? Because this can help you find the trend in the market and keep you alive in trading. Because if you understand the economics in a country, then you'll understand that the currency is going to. So what we do is we just do some reading. Level of composite index based on surveyed households. Okay, so this is all to do with the consumer, the people that buy products, services, the people that run the country are going to be the people that spend money. Us as the consumer. Okay, if you are not part of government, you are a consumer. Okay, that's how I see it. So therefore, what we're going to do is we're going to just read a little bit more about it. Why do the traders care about this kind of news? Indicates that it tells you about how good the economy is in a country. Good GDP, it means your currency is strong. That means there's lots of spending, there's lots of money floating around. There's a lot of things happening in the country, which is really good for investors to come in because they know that the currency is appreciating and it's doing well. So it's a good opportunity to invest in a good economy. That is the reason that drives a currency. A good economic growth. GDP. A good GDP means good for the currency. It means good for the investor. It means Good. So now that we know this has all to do with the US dollar news, we don't have any other prior factors at the moment that we can actually jump on. As we can see, I've already clicked on it and I don't see any prior information here. But what we can see, guys, is what it recently was. So what we can see over here is it's at 101.3 and 99.1. So you can see it went down. Now, let's just go back and read again. It says here, if the actual is greater than forecast, it's good for the currency. Okay, guys, so what we can see from this information is that prior to the news release, we actually had a 101. Okay, so this is what was previous. Okay, now they're forecasting it to be lower. So if this is going to affect the currency in a positive way, it needs to go back higher to 101 or higher than that. So we want it to be higher than forecast. Like here, greater than forecast is good currency. So we need the actual to come over here and for it to be better. Once we see those results, then we can go and look for buying opportunities in the market. Now we know US dollar, we need to go and find pairs that are based on that. 4 p.m. So if I go down to my computer here, if I go down to the bottom of my computer here, it's not popping up your side, but it's 3 o'clock my side in South Africa. Okay, so I need to wait until 4 p.m. to actually go look at the market and trade, but I can pre-plan before this happens. So I got an hour. That's way more than enough. Shouldn't even take you more than 30 minutes to do this, guys. So now that I know that, I've already actually got at the top here, the CAD ready. So guys, these are the areas that I've already plotted out for me to trade in. And I want to start right from the top again. Okay, we're gonna just exit all of this out. Let me clean this out for you guys, and we're gonna start all over again. Okay. Please, guys, make sure you start your trading analysis from a higher time frame. It's just going to give you a better accuracy of what's happening. So what we're looking for, guys, is higher highs, lower highs, or lower highs and lower lows. Okay, like this. This is how a trend works. We got 1, 2, 3, 4, 5, 6, 7. Okay, now as you guys can see, that's a lower high. Okay, and then we have a higher high. Okay, then the previous high and low. Okay, so this means we're starting the trend. Now, as soon as we get more higher highs, okay, and lower highs, then therefore we now know we are in this direction of movement. Okay, then we get the opposite, and it's an impulsive movement, and then it falls down. Boom, 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 boom. Now, guys, we can already see from that it's going down. The market is moving down. So we now can see that there is a lower low. Okay, so we have a high here, then we have a low, then we have a lower high and a lower low. Okay, so this keeps happening. So when we can see that the market is actually making lower lows and lower highs, we now know it's in a downward trend, okay, which is a bear market. The other one was a bull market. Once we get that understanding, then we can really plot for our trade. Because a lot of the time, guys, the markets either trend or they stay stagnant. And that's called a consolidation. So a consolidation now, just for argument's sake, is where the market just does this. Okay, can you see it's not really making any new highs or lows. It's kind of like just staying in one movement. It's not like doing anything. Yeah, there was a new high there, a new low there, but can you see that it didn't make a new one, and it just made it like basically double bottomed out. So we actually want the market to make a new high, or we want it to make a new low, and then we can figure out in which direction it's going to go. So that's why consolidations are kind of like, okay, I just need to wait. There's nothing more I need to do. You just gotta like wait. That's why patience is a virtue, guys. So let me get all rid of that. Now let's go and actually see from this perspective, where are we in the market? Okay, so we can actually easily see, guys. I mean, it's not really difficult to see where you are. Please make sure that you highlight these areas, guys. I like to put it at the wick, because then I know that the wick of area is it's the end of the end when it moves into that area. Okay, now that I've got that, we can actually see that this area here looks pretty dominant, and it has broken through a consolidation. And you can see that by here. This was actually making the trend I was actually speaking about, guys. Look at this. Boom, 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 boom. boom, and then it started consolidating. Then it broke out, then it came down, then it broke higher, and then it made a new lower high, and then it shot off. So from that, we already know, okay, so far, what's happened with the USD CAD is over the last, since 2022, it really has been moving back up. So we're just gonna put this and say to ourselves, okay, that's the lowest it went in 2022. And then it hasn't come back down to that level ever in a while. So we're going to just cap this off with making sure that we understand that this area is within our reach. We don't want to be looking down here because it's going to take too long. Guys, every one of these candles are a day in time. So if you just want to figure out how long this has been in this area for, then you can just count 1, 2, 3, 4, 5, 6, 7, 1, 2, 3, 4, 5, 6, 7. So that's 2 weeks worth of trading. Okay. And it's just gone up, but it hasn't broken a high yet. So what I'm going to do now is I'm just going to put a line here. Okay. But also I'm going to box it off. So what I like to do is I like to put these boxes in just to remind myself that, hey, listen, this area was recently a good sell area, okay, on a daily time frame, which is nice, guys, to know, because you know that it will probably take a day to break that area. And if there's bad news, then I don't think it will break. And I like to say that, guys, remember, this is my strategy. This is how I view the market. This shouldn't be used technically as your go or be all. You need to take in information and go look at other people's opinions, the people that have actually good financial understanding. This is something I've been using for the last 4+ years. It's very, very powerful from my perspective. I really enjoy it. So please, guys, take this with a grain of salt and also keep a very tight stop loss. Okay, this is not advice, this is just my trading strategy, and I'd love you guys to see how I trade and also integrate this with getting a funded account down the line. Okay, this is what I'm trying to do. I'm trying to help people see the charts from my perspective and also hopefully give them an understanding of why the markets move the way they do. Okay, so now that I've highlighted an area of a sell zone, I like to go here and just remind myself. Okay, click the button, so sell area on daily. Okay, just remind myself, guys. Cool. And now I know I've got this big ass thing that's like, okay, I must remind myself that this is a seriously good sell area. I don't put it like too close because then it's like, I must just remember when I'm looking at the daily time frame, that is a good sell area. Okay, now what I'm going to do is I'm going to go and find out, okay, where are some other good areas? Right down here. I like this area. It got hit twice and it moved off. That you can call a double bottom. Okay, now where else can we find that structure has broken before in historical means, which is basically where a structure has formed is where price has bounced a lot in the same place and then broken through and then come to retest the same area and moved in a direction. So we can see it right here. Okay, guys, right over here we can see it. So I always like to make sure that I just highlight these areas. Okay, boom. Now, once I have an area highlighted like that, and then I can look onto the right hand side and we can see, okay, this area definitely has moved before. And we can see it actually wicked off into it and then shot off. So what I want to do now is how my strategy works is any impulsive movement upwards, we can use the Fibonacci, or any impulsive movement downwards, we can use the Fibonacci. We're looking for a retracement. The Fibonacci retracement tool is used for a retracement. Now you're only going to buy it if there's good news for the dollar. Okay, so what I'm going to do is highlight this area which has had like a lot of bouncing, but also I want to make sure that it is in line with the most possible recent rejections. Okay, and I like this a lot because as you guys can see here, we've had a massive movement up, then it just touched and shot off. When that happens, guys, you can guarantee it's a very strong area. And if we just go and look to the side, okay, you can see it did it again. Okay, so we're just trying to copy and paste. Okay, don't stress about what you're seeing. Look to the left and redo. Okay, take a small risk, see what's happening and redo it. Now, if it doesn't work, it doesn't work. It just means that area wasn't as good as you thought it was. And that's fine. You're going to be wrong every now and again. So please don't feel bad, guys. Trading is difficult, but it's not when you understand the concept of it, where you need to have a good risk to reward. Okay. So now that I've done that, guys, all I'm going to do is go and find a nice area here with a good rejection level, which is insane. And I'm going to take the gamble, in inverted commas, which is actually calculated because now I know that the market is moving in my direction. We have seen that it has been moving up most of the time. And I like the fact that this area impulsed. So if we had to look at it from a different perspective, this is just the one movement up. Okay. And I want to make sure that I capitalize on the retracement. So what I want to do now is I'm just going to highlight this area like this. Okay, just put it in there. Okay, now I know from that area, I can say to myself and be like, okay, cool, I like this. I really do. We have the impulsive movement. It didn't break a high though, guys. So technically not really the best. But at the same time, the fact is I want to try and find a retracement buy if there is good news for the dollar. Okay, now what we're going to do is take away the fib so you can see the chart better. Easy peasy, lemon squeezy. That is all you needed to do. Now what I'm going to do is just show myself what I want. I want to see this area get touched, and then my aim is to go up to there. Okay, done. That is all I'm waiting for. And then I'll just set an alarm. Boom. And then I'll say to myself, I will say possible buy for USD. Okay. Possible. Not definite. Possible. Okay. Then I just create the thing. Done. Then what I also can do is, remember, we have a sell area on the daily. So what I'm also going to do is just on that little wick there, I'm going to enter another one, and I'm going to create another alert. So I'm going to say sell. Wow, that is bad spelling. Let's do that again. And is that correct? Yeah, you know what, guys? It doesn't really matter. I can read my own writing, hopefully. Let's just keep it at that. Yeah, possibility. My word, why am I so bad today? I have still a possibility. Okay, and then I'm going to create that. So can you guys see, I've planned for both good and bad news. I haven't just decided it's only going to buy, it's only going to sell. I don't know what's going to happen, guys. Otherwise I wouldn't be sitting here teaching this, because I would be making so much money if I was always right, and no trader would care about helping anyone else, because I just have to click a button and you would make money, because you just know. What's the point? You know what I mean? But we need to prep and plan for all of this to happen. Now that once I've done that, okay, you can actually go here and say to yourself, I would like to make sure that I can check this out later. So the main thing is, guys, we have everything we need to trade. Okay, we've got the movement up. Okay, we've had a beautiful movement, so we're looking for the movement back down. Market has moved up from this area before, so I'm going to hold on to trading that area and that area only for buy, and a sell for that area and that area only. Now I'm done with the chart. I don't need to do any more. It doesn't make sense for me to do anymore. Okay, and that is as simple as it gets. Now when you're ready to trade, guys, you're going to go slightly into the lower area just to watch the market move. Okay, and then please make sure you delete your plan. You already have planned it out. That's why we've got everything we need, and we want to just make sure that the charts are as pretty as possible. So when the market gets to this area, my alarm will ring. Then once it's there, then I'm going to go into a even lower time frame to just do the whole thing again. So if we go into the 5 minutes, okay guys, this is why I like doing this. So can you guys see that from a high level we hit the daily time frame area and it started moving down? And how we knew that this was starting is once this level broke, you could say to yourself, okay, there is a possibility of a downward trend. And that is what I do. I wait for a rejection, pull back into the area, and then trade it. So for me, I would have gotten a lot earlier just for this one reason only. Once it had broken this level, I would have been looking for a trade. Okay, because that is how I like to trade. I just look for a break of structure. I'll put it like that. And then once it is broken, we look for the retracement, and I use the fib zone to do that. Now we're in the 5 minute, guys. Just remember that. And then look at this. I use the golden zone, which is in between anywhere here. And my strategy is to enter here and put my stop loss either just above here or above the entire liquidity area that could possibly be touched consistently. So you've just got to remember your risk and your reward and your account size are all very important. If you really want to know more about your risk and how to figure that out, I'm going to jump onto the actual account and then show you guys what to do. I am actually in the process of taking a funded account, and you guys will see that it is a demo for now. Once you pass the demo account, you get your funding, and then you can trade with anything from $6,000 all the way up to $200,000, which is really great for us traders, guys, because now you don't really have to save up all of that money and then lose it. You know what I mean? Why not just get funded and then not have to worry about anything? You don't have to worry about your risk as well. You do, actually, that's a lie. You do need to worry about your risk, but you're not going to be hurt because it's not really your money. You get paid for doing well. You'll get up to 90% of your profits paid to you on their account. So as long as you're making profit, you can withdraw 90% of that. But if you violate any of the rules, then you get your funding taken away and you need to just do an exam again. And that's your only real expense, guys. Okay. So now that I've shown you guys all of that, let's go and see how you can determine your risk. And remember, I always used to like a calculation, right? There's a very specific one. You know, normally only should risk anything from 1 to 1.5% of your capital, right? And to make about like 5 or 6% max on a trade. I like to use a 3, 4, and 5 times my risk to really get the ball rolling. So how do we determine that? Very simple. Let me quickly bring up my trading account. I'm going to use the CAD for an example here. So if I open this up, there we go. Look, I've got the $6,000 funded account now, but this is the demo, which is the exam, which you need to pass in order to get the funding. So right now I'm looking at this level in the US30, but let's go to the USD CAD so I can explain this all over again for you guys. How would I figure out how to determine risk? All I do is I pick up my phone and I do the calculation. Okay. Now I know for a fact already, like I only want to be risking about anything from $20 to maybe $50 in a day. Okay. Why? Because my entire risk is all based on a $600 that I can lose, because you're only allowed to lose 10% in your exam. Sorry, we've only allowed to use $600, which therefore is 10% of your account. I would never ever risk 10% in one trade. So why don't we make it less? We're going to make it 0.5% of the account, which actually makes it out to be, let me just double check with this. Let me do this quickly.
A few moments later.
So if you are trading and wanting to actually really do well, you don't want to be risking that 1% in one trade. You can risk it over the day. So 1% a day is a really good area to trade with. You actually can get the feel for trading instead of like risking one trade, losing the account, and then what? Yeah, exactly. You don't want to just lose it in one trade. You need to be profitable over a period of time. So the easiest way to do that, therefore, is like this. We go here, we go to the trading account, and all we're going to do, but it has to come down, back up to that area that I showed you guys. Then I put in my fib zone, and we are going to see, okay, there's too many random lines here. So just for the sake of this, I'm just going to exit this for you guys. Boom. Cool. Now we just need to make sure that this is positioned correctly. It needs to go over to that low, because just pretend, guys, for argument's sake, we don't know how far down this would have gone. It would have hit your TP perfectly, actually. So for me, that would be your entry right in here. Wait for the market to hit and get rejected, and then you can enter. Okay, so that is what I like to do. This is how I like to trade. And because it broke that little area there, it pulled back, came into the area. Now remember, we just want to quickly go and double check that when we come out to here, you can see, look how little this movement actually is on the big time frames. We just want to make sure that we do that thing that I showed you. We need to put in a resistance level, boom. And then we also wanted to make sure we go to the daily and just check how big that wick was, because then we can actually highlight the area in which we would like to make sure that we trade in. So that would have been a perfect area. Now you go back to the 1 hour, and then you can see, look, it came into the area and got rejected. Okay, now we go to the 5, and then we do and repeat the same scenario. So guys, can you see that this entire area here, there it is. So we want to put a trade in here, and you just do this. I think a sell for this would be too little. Let's go 0.10 and I'll put my trade in there. Sell. Now I haven't sold the market, guys. That is called a limit. Okay, but it's also easy for you to deduce what's actually going to happen next. Double click on it and then look at the number to the left. Let's just double check if we've got the right one, slightly higher than it. Okay, and there's the number you want to copy. Okay, so we're just going to go like this. Type it in 1.3 and then modify. Okay, now your stop loss should be up here somewhere. Okay, so can you guys see my stop loss is there now? Now you can actually determine, okay, this is good. Look, what was my risk allowed? I'm only allowed to risk anything from $20 to $30 in a trade. That is perfectly fine. Okay, that means I can take 3 trades, which would be just over $30, which is perfectly fine to trade with, guys. Okay, so now I know in my head, I'm trading with a 0.10 and I can end this trade because it's not going to be risking too much of the profit. And if we had to see how far this market would have gone, we would have been at $38 on the trade, which is actually very significant, guys. Remember, 0.5% of your accounts is actually $30. So therefore, you're doing extremely well in one trade. Now, let's say for argument's sake, it actually hits where you wanted it to go, which is literally going to be the area in which you would buy in, okay? So we would literally go like this, and I wanted to enter the market down there. Then now you can just go and double check, is this really worth it? Now we go TP. What is TP? Let's put it in 1.34415. Okay, modify. Put this down here and back up. Okay, what would I make if this market had gone? You would have made $148 on a $14 risk. Would you do that? You need to think like that. That is 10 times your risk. And also remember, guys, you can also take the trade out earlier if you want to, or you can even do something called break-even trading, which is where you move your stop loss into profit. So I've entered the market, stop loss is here. After the market has moved down significantly, at least more than the risk, then you're going to put your stop loss here, and now you can't do any bad. You can't literally, the market comes back, you still break even or slightly in profit. Okay, so there's so many ways to protect yourself, guys. There's so many ways to ensure that you're not going to have a bad trade, and there's also so many ways to trade. This is my way of trading, okay, and it just gives me that confidence because I find that a lot of people are too worried to risk, and if you're risking too much, then therefore you are trading with too much of a high lot size. So I know for 100% I can trade with that kind of size on any of the Forex pairs because they're kind of similar, maybe slightly more, might be slightly less, and that is what I'm going to do. And I literally just did that now in front of you. I haven't actually taken a trade with this yet, just to prove it. I haven't done anything yet. There's no trades being taken. Literally just started with my step 1 demo trading account for my funding, and that's how you guys must do it. Okay, do the calculations, check your lot sizes, make sure that your lot sizes isn't too big. You should be able to take 3 trades, guys, and it shouldn't even come close to your 1%. Okay, now for me, if I do take 3 trades, I'm still going close to only 0.5%. Can you guys see where I'm coming from? So this helps you make sure that you can have more trades and have more possibilities, and also not risk too much and lose your account so fast. Guys, you need to be trading for 20 days in a month because that's how many trading days there are. And then at the end of the month, see what your P&L is. And if you've just stayed above profit, then you're doing freaking brilliant. Okay, it's not about making a $50,000 trade in a day. You do that when you're extremely good and you know your strategy very well, and you have the money and the capital to do that. So let's put those two together. Let's get the money through funding, and let's create the right trading strategy that allows for us to have some losses and then figure out what the market's doing and then execute, knowingly that we can't really lose too much. Okay, sweet guys, I hope this video helps you, and I really do hope that you guys get some quality information from this. It's very important for you guys to actually apply this, not to just watch it and then do nothing about it, because you know what, knowledge is nothing without application. Okay, other than that, guys, if there's anything else you would like, please comment below. Let me know what you think about the video, and also if there's anything you need help with, I do have a free trading group that you guys can join. Everything will be linked below. Also, there is a beautiful opportunity to get a funded account from Funded Next or FTMO. Both are unbelievable brands, dude, in the Forex industry. They are providing successful traders with capital to really make their career a success. Also, if you are looking for a broker and you'd like to learn how to trade on small accounts, or if you have a larger account and you're not too worried about getting funded, then I do have a broker that you can use. Everything will be in the description below. Thank you so much for watching the video, guys, and I hope you have a fantastic day. And please just remember this one thing: you are more important than the charts. So please look after yourself before thinking that you can make all the money in the world here. Because if you're not well, then how the hell are you going to trade well? Thank you.